In my opinion, and I'm not a professional investor, but I just think there's kind of two ways you can go with investing. So one would be to like be a sophisticated passive investor where you are not trying to apply a really like, you're kind of doing what I said, where like you realize you can't learn from the noise. So you just do the linear regression model. So you just understand asset allocation, you understand, dollar cost averaging, you understand all these basics and you just stick with it. And over 20, 30, 40 years, you're going to accumulate a lot of wealth. And I think that's probably, my opinion is probably the right thing for most people. And then there's active investing where maybe it's going to be your full-time job or like a serious avocation. You're going to pick stocks, you're going to pick investments, you're going to try to get alpha, whatever it is. And I think that is a harder game. So if the audience here were like Wall Street traders and we were trying to talk about like, how do you perfect in a noisy environment? I think that is tricky. I think that you have to have some sense of the hard part too is I think unlike poker is that the market is just fantastically more complicated. And so it's harder to actually even work out analytically that this was the right decision to purchase at this time. But I think you could probably at least work in some simple cases. So if you worked with some, I know that there are people who do like quantitative trading and they've identified certain types of trades, which they have strong theoretical rationale for believing that, this should be a good opportunity, even if it doesn't always work out perfectly. But again, for the average investor, I think there is still a lot to learn. Like there's still a lot to learn about asset allocation, about diversification, about these basic principles that don't require you to really understand the noise at all, but just really kind of have a strong kind of theoretical foundation for understanding where you should be putting your money and how to make the bets. So I do think the active and passive investing approaches suggest somewhat different learning strategies that as an active investor, you have to really go all in and to try to figure out how do you sort out the noise? How do you get a good model of what you should be doing? And then I think the more passive investments is, well, how do you just make sure you don't do stupid things that cause you to lose money? Like, how do you make sure just that your foundation is so solid that, you're not accidentally leaving money on the table because you're not diversified or you've got like just an inappropriate asset allocation for your financial goals and things like that.